Assalamu alaikum warahmatullahi wabarakatuh. Dear students, you're welcome back to the e-learning portal of Citywide Model College. This is Business Studies for js1 class, week 8, lesson 1, presented by Adeoba. And the topic is Introduction to Bookkeeping. We shall start by looking at the meaning of bookkeeping. Bookkeeping is the recording of financial transactions, be it cash or credit, so far it is a transaction, for easy access to financial information of the business. Let me take it again. Bookkeeping is the recording to record something of financial transactions, be it cash or credit transaction, for easy access to financial information. So the point there is bookkeeping is recording of financial transactions. Bookkeeping is what? The recording of financial transactions. And the need for this is what? For easy access to financial information of the business. Then we shall continue by looking at bookkeeping as part of the process of accounting in business. Bookkeeping is part of the process of accounting in business, meaning that for accounting to take place, there must be proper record keeping. So we shall continue by looking at the importance of bookkeeping. Why do we record transactions? Let me start by explaining to you what a transaction is. When there is exchange or a business, when a business takes place between two people, that is a transaction. Maybe I buy something from you. That means you have sold something to me. I paid for the goods, or I buy it on credit. So far, a business has occurred between both of us. A transaction has occurred. Are you with me? So a business that occurred between two people is a transaction. A purchase of goods or a sale of goods is a transaction. Are you there? So we shall now continue now by looking at the importance of bookkeeping. Why do we keep records of transactions? Why do we keep records of financial transactions? When I say financial transactions, I mean transaction that has to do with what? That has to do with money. Are you there? Transaction that has to do with money. I buy something, I pay. You sold something to me, I give you money. That transaction has to do with money. So we call it a financial transaction. Don't forget, I told you that bookkeeping is what? Recording of what? Financial transaction. And you know what a transaction is now. Okay? So we shall now continue by looking at the importance of bookkeeping. 1. Proper bookkeeping gives companies a reliable measure of their performance. With bookkeeping, by recording their transaction, recording how much money comes in, recording how much goods they sell, recording how much money they have paid out, it will help them to be able to know how well their business is performing. So at a glance, they can tell how much profit or loss they make, whether they are selling very well, whether there's progress in their sales or not. Are you with me? So proper bookkeeping gives companies a reliable measure. When you say measure, to measure something, to know how well something is doing. A reliable measure of their performance. Are you there? 2. Maintaining accurate accounting records is a legal requirement. Proper keeping record is required by law. Don't forget, when we treated some forms of business organization, when we treated limited liability companies, I told you that the public limited liability companies, they are required by law to publish their statement of accounts. Are you there? The statement of accounts is a record of their financial transaction, a record of how much profit or loss they make. Are you there? So keeping record is required by law. They must always keep record of their transactions because they are going to submit it to the Corporate Affairs Commission. And if it's a public limited liability company, they are going to publish it in the magazines for everybody to know how much profit or loss they make. So they must keep records of their transactions or their financial transactions. 3. To improve good financial management and analysis. That is, one of the importance of bookkeeping is to improve good financial management and analysis. To be able to monitor your business, to be able to monitor your customers, to be able to monitor payments made, to be able to monitor supplies. When you keep record of all these things, when some people are due for payments, and when some payments are due, when it is due for you to receive some payments. Maybe some goods have been sold on credit. With your record, you'll be able to see how much credit you have sold and when they are supposed to pay. When those monies haven't come into the business, you will know. So you'll be able to monitor your business by keeping proper record. Are you with me? You'll be able to monitor how many goods you have sold, how many is supposed to be left. Are you there? Is it the amount that's supposed to be left that is actually left or is missing? You'll be able to know by keeping proper record of your transactions. Another one is easy business planning. Another importance of bookkeeping is what? Easy business planning. How you know what planning is? To plan is to what? To prepare ahead, to prepare for something in the future. So with your record, you can plan. Okay, I want to expand. How much profit do I have now? Okay, I want to expand. How much sales do I make now? So the record you keep, we help you to plan, to make future plans on your business. Maybe you want to expand. You look at your records. How much money do I have? How much credits are there? How much is outside that I've not retrieved, that I've not received? Okay, how much sales do I make every month? And so on. So all these things that you have recorded will help you to make plans about your business. Another importance of bookkeeping is easy reports to investors. Easy reports to investors. Who are investors? People that want to invest in business. People that are looking for businesses that they can put their money into. Are you there? Investors are people that are looking for businesses that they can put their money into for them to be able to benefit from their profits. Are you there? For instance, companies sell shares where people can put their money into the company, and when the company makes profit, they can get out. They will also get part of the profits. Are you there? So the company will be running the business with their money, and at the end of the day, they will share the profits together. So people that put their money into businesses are investors. So you also need your records to show the investor that your business is booming, that your business is progressing, that when he puts his money into your business, he will be able to get his money back. Are you there? So proper record is necessary. Proper record is necessary to what? To show to what? To investors that want to invest in your business. Another importance of bookkeeping is that when it comes time to sell your business or secure capital to grow your business, being able to thoroughly document your past performance will help your company's valuation. Are you there? When it is time you want to expand, you need to borrow money from the banks. You need to get money or subsidy from the government. Are you with me? You're planning to expand your business and you don't have enough money. You want to get loan from the bank. The bank will request for your records to know how well your business is growing, for them to know that if they borrow you their money, you'll be able to pay back, that your business is not running at a loss. If it's running at a loss, they will not borrow the money because they will be scared that you won't be able to repay the money. But when you show them your records and they say that your business is growing fine, they'll be able to borrow you the money. Or you need to enjoy some benefit from the government. The government wants to help some businesses that are growing. Government will request for your records. If you don't have records, there's nothing to tender for you to benefit such things. So when it is time for you to sell your business or secure capital to grow your business, you actually need your records to do what? To get that. And then now we are going to look at who a bookkeeper is. We are talking about bookkeeping. Bookkeeping is what? To record our financial transaction. Then who is now a bookkeeper? A bookkeeper is someone who prepares accounts. A bookkeeper is someone Who documents daily financial transaction? The person that make the records, the person that keeps records of financial transaction is who we refer to as the bookkeeper. The person that prepares your account, that keeps records of a financial transaction, that documents, that keeps records of a financial transactions daily is the bookkeeper. Now let's look at some of the qualities of a bookkeeper. The first thing is expertise. A good bookkeeper should understand the basics of bookkeeping. It should be able to, it should be competent in record keeping. You should know all the numerous accounts, how to do correct entries into all these books of accounts. So a bookkeeper should be someone that is competent when it comes to what? Record keeping. When it comes to what? Making entries into books of accounts. You should have the knowledge of bookkeeping, knowledge of accounting. 2, honesty and integrity. It is the duty of the bookkeeper to inform the manager or management of any discrepancy or error in the books of the company. So a bookkeeper should be someone that is honest, someone that is truthful, someone that is not deceitful, someone the business can rely on, someone the business can trust or the company can trust. Another one is excellent communication skills. A bookkeeper should have good communication skills, should be able to express him or herself in a clear terms, in a way that people will understand. Then bookkeepers should be able to use business software and technologies. There are so many softwares that you can use on your computers to input financial entry transactions, to do some accounting. So a good bookkeeper should familiarize him or herself with what? Using the latest business softwares. Should be able to use the computer. A bookkeeper should be able to use the computer and be able to use the accounting software, business softwares. Another one is that a good keeper should be organized. What do we mean by being organized? To be organized is to be able to plan things. When you're organized, you're able to plan things carefully and keep everything tidy. So a bookkeeper must be organized, must be able to plan things carefully, correctly, and must be able to keep things tidy. A bookkeeper is someone that is not, when they ask her to bring a file, she wouldn't know where the file is. She will be running helter-skelter looking for files. No, a good bookkeeper should be organized, putting everything in order, in their right places. Then a good bookkeeper must be able to work with others. That is what teamwork is. Teamwork is for you to be able to work with other members of the organization. Another one is carefulness and accuracy. A good bookkeeper must be careful and be able to do her work without mistakes. A bookkeeper must not be someone that before he or she writes few lines, he has made mistakes. Or somebody that is not good at arithmetics, calculation. We always make mistakes. Such a person cannot be a bookkeeper. A good bookkeeper must have a legible handwriting. Then a good bookkeeper must be able to work under pressure. To be able to work under pressure means that you should be able to do things irrespective of whatever condition you are. You're given deadline, you should be able to work and meet up with the deadline. Are you with me? So we're going to look at common bookkeeping practices. Common bookkeeping practices. The first one we're going to look at is that when we say common bookkeeping practices, that is some general bookkeeping practices, some things we do in bookkeeping. Set up a chart of accounts that best keeps track of all your bookkeeping. That is, whatever accounts that you want to use, that you're going to use, you must select a particular account that you're going to use to record your financial transactions. Are you there? You select the account that you want to use. Then the books of accounts are usually ruled in columns. Whatever book of accounts you have chosen as a small scale business, whatever book of accounts you used, such books of accounts are usually ruled in columns. Books of accounts are usually ruled in columns like this. Can you see? Books of accounts are usually ruled in columns. There is usually a column for date, a column for particular, a column for date, a column for particular, a column for amount, and under the amount we have column for naira and kobo. So there's usually a column for each of these headings, as I've said, as I've shown you earlier. So there's usually a column for naira and there's usually a column for kobo. Then the naira and kobo signs are usually indicated in the records at the top and not in the column. So you don't have it inside the column. You see, I have just the figures in the column. The naira and kobo will be up here. Excuse me, this kobo is supposed to be at this side. So the naira and kobo is usually up at the top here, not inside the column where you're going to write the figures. Okay, so that's that. 2 zeros are written in the kobo column when an amount is in naira only. For example, we have 3,000 here, so under naira we have 3,000. There is no kobo here. But for the second transaction, which is office equipment, we have value for naira, that is 10,000, and we also have value for kobo, that is 20 kobo. So when there's no value for kobo, you put 00 there. Okay. When a bookkeeper rules a single line, Bennett and amount, it indicates that a total or remainder will follow, while a double ruling across an amount indicates that the work above the double line is complete and accurate. So it means that when you're through with whatever recording you are doing, you have arrived at the total, the final figure. So you underline it, you give it double line, you double, how do I put it? Double lines. You put double lines, Bennett the figure. You underline the figure 2 times, showing that you're through with that particular, that is the correct total final figure that you want to arrive at. Are you there? But if you're not yet arrived, if you haven't arrived at the final or total the final figure, you give it 1 line, and then it shows that probably you're going to put the total under it or the remainder under it. But when you have 2 lines below or beneath the figure, it shows that okay, you have completed that transaction. The final answer is that figure. The next thing we're going to look at is that the records must be neatly ruled. As a good bookkeeper, your work must be neat. So you want to rule, probably you're a small scale business, and you want to draw your book yourself, your book of accounts yourself. You use ruler to draw to make your account neat. Then balance and record daily sales and cash receipts daily. That is, you must record all your transactions every day. Your transactions must be recorded every day. Not that somebody, the sales for today, say, I will record it tomorrow. No, you must record every transaction every day. And the last one is that you should reconcile your bank accounts. That is, at regular intervals, you should reconcile your accounts. That is, you should compare your accounts with one another and be sure that there are no errors. So that's what that means. So this is where we're going to stop today. Inshallah, till we meet again. Assalamu alaikum wa rahmatullahi wa barakatuh.